All right. It's a great day in South Florida. My name is Chris Igo, and today we're going to get right after it because I just received a phone call from someone just like you. They found me on YouTube. They live in my community, and they're thinking about selling their home. But they also just watched my video that Florida home prices are about to drop by a lot. And they told me that they're afraid that they missed the top of the market and they will not be able to buy their dream home and dream lifestyle in a bigger home. And so today I want to address some of the things that I discussed with them because there are lots of home sellers right now that are afraid they missed the market. And many of them now feel trapped in a smaller home and really they'd love to be in a bigger home. And they're afraid they might be trapped. Well, the good news is, and every case is different and every situation will be different. So it's not necessarily true that what I shared with them is going to apply to you. But for lots of folks who are thinking about selling and buying a bigger home, you're not trapped by any stretch of the imagination. Now, I'm well aware that there are plenty of content creators out there and tons of headline news out there that is creating a lot of noise that would have you believe that you are absolutely trapped and you will never get what you want. And that simply is not my experience. So today I'm going to share with you what I shared with them. But first, I want to take you on a little tour because as I was on my morning walk today, or actually mid-afternoon walk, I saw that there is an open house in my community. So I wanted to drive by that open house to show you exactly what the temperature of the market looks like right now on the buy side. Because in the not so distant past, and I've done tons of videos in here showcasing different open houses in real time during the frenzy, I want to be able to compare and contrast what it looked like then versus what it looks like now. Because supply and demand has absolutely shifted, and you need to know exactly what those shifts mean to you relative to what you want, because supply and demand are going to dictate everything in any market that we're in, especially the real estate market. Now, as we're driving over there, I want to talk about what happened this week because CPI numbers came out and they showed that inflation, or at least core inflation, wasn't as bad as what they thought it would be. Now, make no mistake, it wasn't great. Inflation is still completely out of control, but it wasn't as bad as what they thought it would be. For a second there, I thought I missed the open house, which would make this little video tour completely useless, but it turns out that I just drove down the wrong street. So let's get back on our merry way and find this open house and see if there are lots of people out front. See if there's a tremendous amount of buyers who want to buy that home. And let's see if there are tons of buyers who are willing to outbid the competition and waive all the contingencies and fight tooth and nail to get the house. All right, so we got some open house signs. And, ooh, maybe this Amazon driver is gonna buy the house. What's up, my man? All right, so we got an open house, we got a sign. That's the homeowner's car, and we got no people outside. Now, what you will see is lots of people in the cul-de-sac because it's football Sunday, and there's lots of people who are enjoying their friends and neighbors and watching football, but none of them happen to be going to that open house, which is proof positive that the market has changed as far as demand is concerned, at least relative to my hyper-local market. And that's exactly what I wanted to talk about. So open house, nobody here. And so that agent hosted an open house and nobody showed up. Well, I will not pick apart what I would do differently as far as that open house is concerned, but I can tell you there's a lot I would do differently. Nonetheless, nobody there. So what does that tell us? It tells us that the demand that used to be extreme isn't as extreme anymore. But I already knew that, right? Because interest rates have changed radically. We were pushing 7.3%. And as I mentioned, the inflation numbers came out. They weren't as bad as everyone thought. They certainly aren't good. But nonetheless, we had the biggest single day drop in mortgage interest rates since 2019. So we were at 7.3, and as of Thursday, they dropped to 6.62. So as of Thursday, when the economic data came in and CPI numbers came out, what did we learn? Well, we learned that inflation wasn't as bad as they thought it was, and interest rates dropped significantly. And so as of Thursday, they were 6.62. Now, mind you, that's if you've got perfect credit, right? If you don't have perfect credit, then you're probably looking at something closer to 7% or higher. But interest rates go up and down, and it is what it is, right? And so, in spite of the big mortgage interest rate drop that we saw on Thursday, it did not materially impact the demand of buyers in the market as of Sunday. Buyers are still spooked, affordability is still an issue, and there's still a ton of uncertainty around what's going to happen in the housing market. Which brings me back to the story of the people who gave me a call because they were spooked that they had seen my video about Florida home prices about to drop by a lot, which I will link at the end of this video so you can check it out. But these folks saw my video and they are move up buyers, meaning they have a home to sell and they want to buy a bigger, more expensive, more luxurious home because they've outgrown the old one. And there are lots of folks like that in my market. And so I hope this video will address some of the concerns that you might have if you're out there thinking about selling or thinking about moving up to a different home, thinking that you missed the top of the market. Now, full disclosure, I am not a market timer. I am never going to be smart enough to call the absolute top of the market or the absolute bottom of the market. But what I can identify and what I can track are the changing dynamics of supply and demand in my market and other markets around me. And so in the video that they watched, I talked about for the first time in a real long time, I was able to see a 12% price decrease month over month in home values in my hyperlocal market. And as I've said in the past, there are many markets that exist within the big market. And each market is different. It has its own supply and demand and intensity for lots of different reasons. There could be all types of different products that exist in different markets, all types of price points, all types of locations, all types of amenities. The variables go on and on. But the trend that is consistent in the overall housing market in Southeast Palm Beach County is that demand has dropped significantly and supply has increased tremendously. And all of the numbers that I share are lagging indicators. And although the metrics that I personally track are more real time than what you'd see from the MLS, they're still a couple weeks behind. And so some of the luxury communities that exist in West Delray and in West Boca Raton, which on paper are still appreciating in price, I know that the supply of homes in those markets has increased exponentially. And I also know those homes have been sitting on the market for a long time. And I'm also aware that some of the communities that exist in those markets had sales restrictions on them, which meant that if you purchased a home, you weren't allowed to sell it for a period of time. And if you did sell and you did violate that restriction, all the profits went back to the builder. And the reason the builder did that was to discourage flippers, or said differently, investors who were just looking to flip the home and turn a profit. But what I know to be true, but the market stats don't show, is that many of those sales restrictions are coming to an end. And some of the newer communities that are even more luxurious and even higher price point, they don't have those sales restrictions. So many of the homes that are listed in these affluent communities, and I'm talking about Boca Bridges right now, they can be flipped instantly. And an investor is not going to have any emotional attachment to that home sale. And if that investor knows what the market is, chances are they're going to be willing to cut a deal immediately. Because they certainly do not want to be playing the catch a falling knife game, which is sure to happen. But to what extent, how severe, what degree, I don't know, yet to be determined. But I do know that the inventory of $2 to $3 million homes has exploded. And those homes are not selling fast. And so in my video about home prices about to drop a lot, I talked about the trend that I saw in my hyperlocal market where month to month home prices decreased by 12%. That hasn't happened in those other markets yet. In full disclosure, I don't know that that trend will continue in my market. I will definitely keep you updated. But I do know if there's 30 homes that are for sale in that price range and none of them sell, I know there are going to be price reductions. And I know that they're going to be willing to negotiate. And I know that you'll be able to score a better deal, which is a long way for me to get to where I started, which is the phone call that I received from the nice family who's thinking about selling. They've outgrown their home and they want to be in one of those luxury homes that I just discussed. And so I asked them some questions and I got a feel for where they're at in terms of equity and in terms of timeline and in terms of what they want. And while it's yet to be determined whether they missed the top of the market for their home sale, I do know that if they were to sell today, they would cash in, or rather, they would cash out with a tremendous amount of equity. And they would be in a position where they are now liquid and cash rich and be able to easily put down 25% on their next home purchase, which is fantastic. And here's why. It's because with 25% down on a conventional loan, we can negotiate a 9% seller credit to your closing costs and to your rate buy down. And so right now there is a lot of concern about affordability and a lot of concern about mortgage interest rates, but move-up buyers are typically going to be in the driver's seat because they've got the equity to be able to put down for us to negotiate that credit. Now, if the market was super hot like it was 6 months ago, there's 0% chance we'd be able to negotiate these kinds of deals. But the market giveth and the market taketh away. And right now we are in a position where we can negotiate the best deal possible for you, which means we can aggressively negotiate price. And so when I shared this with these potential home sellers that want to move up into this new home, they were thrilled to hear about the options that they would likely have. But they were still afraid that they may have missed the market. Now, I know how to price a home to ensure that we don't miss the market and we create a seller's market. We create a market within a market to ensure we find the one buyer on planet Earth willing to pay more than anybody else, but not every other agent does. And so when I role played with them what it would likely look like if we were to sell, I always give them the worst case scenario, which might be a little bit less than they thought they would get on the high end, but it's a massive win from where they purchased the home. And so what I shared with them was, and right now to illustrate this point, I'm going to make up numbers to make it easy to follow. But let's pretend for this example that home prices are 20% off the high, which again is not an accurate number, but it illustrates my point. If we're down 20% from the high on your $700,000 house, then it stands to reason that we're also down 20% on the much more expensive home, which is a much bigger number. And they can absolutely score big from where they bought the home and lock in close to a 50% gain and then negotiate aggressively on the purchase. And putting down 25% on the new home allows the seller to contribute 3% to their closing costs and 6% to the rate buy down. And these folks have perfect credit. So the rate drop that just happened down to 6.62 can be brought down to 3.5 on a 30-year conventional fixed rate loan. They were absolutely ecstatic because it's yet to be determined if they missed the absolute top, but they sure as heck scored a massive win, unlocking a tremendous amount of equity, which allows them to max out South Florida living to the fullest and move into a bigger home in a luxury resort style community that has everything that they ever wanted and live their best life now at 3.5%, not 6.62, because we know how to negotiate. Which brings me back to, are move-up home buyers trapped? And the answer is no. But let's be clear, inflation is out of control. Interest rates, they went down. I got news for you, they're going higher. I suspect by the first quarter of next year, we're looking at something close to 10%. Now, I've done a lot of content in the past talking about the recession, talking about the economic conditions, and talking about the pain that will be felt by the consumer when the recession really gets bad. And I've shared the biggest linchpin to creating weakness in the housing market is layoffs, unemployment. Now, I don't know if you've been tracking at home, but the truth is there have been massive layoffs on the tech front and the real estate sector for the last quarter. Twitter cut 3,700 people from its workforce. Meta cut 11,000 employees. Lyft 700, Shopify 100, Microsoft 1,000, Tesla 10% of its workforce. Coinbase, 1,100 employees. Disney just announced a hiring freeze because their quarterly numbers were terrible and that layoffs are coming. Opendoor chopped 18% of its employees. Redfin chopped 13% of its staff. Zillow gave the boot to 2,000 employees. And Salesforce is doing the same thing. And all of that was predictable because as quarterly numbers come in, and the CEOs of these top companies are not going to allow themselves to go out of business, they're going to trim the fat. They are going to lay off people to reduce their expenditures. And I've been talking about that for months, and it's predictable, and it's happening in real time. And this is just the start of the recession. So as the pain of recession gets worse, do I think the housing market is also going to get worse? Yes. But how bad and how severe, yet to be determined. What I do know is this: if you're thinking about selling, right now is the best time to do that. You want to be in front of that economic pain, because when everyone runs for the exit at the same time, very few get through. And so the folks who called me who were a little bit anxious about potentially having missed the top of the market, we're thrilled to know that right now we can still go out there, find the one buyer on planet Earth willing to pay more than anybody else, and help them cash in on the equity in their home, and then negotiate the best deal possible. I hope you found this content valuable, and if you did, please subscribe to the channel, give it a thumbs up, share it with a friend, and please check out my next video because I suspect you're going to love it a lot. And until next time, peace.